many people think that I will choose a REIT, but this time around, I'm going to do something different. I'm going to choose a bank. And that bank is not DBS. Many people have been asking me, is that will REIT see a lack of growth in the future? Because assuming the economy does not fall into recession, then if it falls into we can have another topic on this. When you invest in a bank, you don't have to worry about dilution due to rights issue and things like that. Like businesses, right, from the Greater China region, they want to expand to ASEAN and vice versa. She's also the director, one of the directors in Mapletree Pan Asia Commercial Trust. She was also the nominated MP before.
Somoto Wang.
Yeah, so she's like very competent.
Know that this is their chance to turn things around. Let Nike be on the global stage again.
Very interesting share there, bro. 40% ROE is really fantastic.
For the readers, welcome back to our channel, right? So today we have Jun Yuan, okay, and me, James. We are trying out something new, lah. So it's like a monthly fireside chat. We just talk about a topic that resonate with you all. So if you want us to talk about other topics in future, you can leave a comment down below. But for today's episode is on second half outlook, okay, and one stock pick from both of us, right? So without further ado, I just pass the baton to Jun Yuan first. So you will share about the outlook.
Hey, thank you, James, for the invite, and definitely it's an honor to be on Invest Kati's YouTube video again. And okay, I will start off with my outlook for two things. Number one is REITs. Number two is banks for the second half of 2024 and beyond. So starting off with REITs first. So particularly with the interest rate still high, and at this point in time, we only know that the US Federal Reserve will start cutting interest rates in the month of September. I think we will have more clues during the Jackson Hole Symposium when the Jerome Powell speaks about it next Friday. But until the time comes, I think right now, interest rates are still at a high level of 5.25 to 5.5%. It has been at this amount for quite some time. And as you can see from most of the REITs results, because of this high interest rate environment, most of the REITs management have not done significant acquisition activities. So as such, most of the growth in terms of its gross revenue and net property income comes organically. Organically means from escalations in tenants' contracts, the rental escalations in tenants' contracts. And number two is from asset enhancement works on existing properties to so-called boost its revenue contribution. So as you can see, most of the REITs gross revenue and net property income grew by at most low to mid-single digit percentage. And coupled with the high interest rate environment, which brought about higher financing costs, the DPU actually, for most of them, saw a low to mid-single digit decline, except for three REITs that bucked this trend. And they are CICT, which is Capital Integrated Commercial Trust, Mapletree Industrial Trust, MIT for short, and Parkway Life REIT. And they have saw some slight improvements in terms of their distribution payout. So, and speaking about interest rates, I had a look at the dot plot chart yesterday. So for 2024, most of the Fed participants are of the opinion that the interest rates will be down to somewhere around 5%. So looking at the current interest rate of about 5.5%, meaning two rate cuts by 0.25%, I think that is the more likely scenario, one in September and one in December. And for 2026, I saw that most of the Fed participants actually anticipated interest rates to come down to about 4%, means another 4 interest rate cuts by 0.25%. And same for 2026, where the Fed participants have anticipated another 4 interest rate cuts down to about 3%. And interestingly, over the longer term, after 2026, they have anticipated interest rates to be around 2.75 to about 3%. And this will likely be the new normal. So for those of you who are interested, they can check out the dot plot chart that I will send you the link to it from CMC Group. So for those who are interested to look at it, you can check it out in the video description below. So of course, with interest rates being like 3%, right, and that will be the new normal. So one of those questions, right, that many people have been asking me is that will we see a lack of growth in the future? Because coming from like a very low interest rate environment pre-COVID to right now, we are seeing an interest rate of about 3%, which is the new normal. So my response is always this lah. No, I mean, when it comes to recovery, no REITs, not all the REITs will recover the same. Some will do better, some will just maintain, and some will just drop off. So it very much depends on the management's capability to try to work around with this new environment. I mean, like in business, change is the new normal. I mean, change is change is like the only constant in business. So in order to survive, you need to adapt to the changing environment. So I think the same goes with how REITs will grow in the coming years ahead. So that's my my outlook for REITs. And then for banks, right, people have been focusing on this interest rate cuts. And then they say that it's a negative because banks derive a huge amount of income from net interest income. And then from what I see for the three banks, DBS, UOB, and OCBC, for the first half of 2024, net interest income have about, they contribute about 60+% range towards the bank's results for the first half of 2024. So no doubt, net interest margin will come down in the coming quarters ahead, with the impact, I think, more obvious from next year, with more interest rates cuts coming along the way. But to me, a drop in interest rate, right, will mean that the businesses will start to resume their expansion activities, because right now they have like sort of stopped or slow down the expansion activities due to the high interest rate environment. So when you see this gradually happen, right, loan volumes will go up. And also at the same time, right, when the economy continues to remain stable, we can also see an improvement in terms of wealth management, credit card fees, and also trading income for the banks as more investors start to take on more riskier investments and also bigger investments. And all these will so-called offset the negativity surrounding the cut in the net interest margin. So coming back to my outlook for the banks in the second half of 2024, right, my outlook is that it will be more or less the same as the results reported in the first half of 2024. The reason is because no doubt the US Federal Reserve will start to cut rates in September. But the thing is that it will take a few months, sometimes around 3 months or so, for the interest rates to trickle down and be reflected in the banks, just like back in 2021, when the US Federal Reserve start to hike interest rates, right? You see that the impact, right, only come a few months later. So in my opinion, for the second half of 2024, this high interest rate environment will continue to become a tailwind for the banks. So this is my outlook for the banks. So what about your thoughts about the second half of 2024?
Hey, thank you, Jun Yuan, for your sharing. So maybe I just want to discuss with you. So do you think that for the banks, right, the positive loan growth will offset, or rather will more than negate the impact of lower interest rates? That means the positive from the loan growth will be more than what they will suffer from the interest rate cuts. Yeah.
I think so. I mean, depending on how the economy is going on. Because as you can see right now, right, we are heading towards a soft landing rather than hard landing. So assuming that it is a soft landing, the cut in interest rates will definitely bring about more business expansion by the companies, and we will see a huge, I mean, we will see a jump in loan volumes that will negate the impact of the cut in interest rates. And also, as you can see from the US Federal Reserve, right, they are quite conservative as far as cutting interest rates is concerned. So I think they will take the conservative approach and cut slowly. And then the impact will be like from the
minimal.
will be quite minimal lah. I think it will be negated by increasing in the loan volumes, assuming the economy does not fall into recession. Then if it falls into we can have another topic on this.
Oh, recession, what to do? Your views is a bit different from the analysts. Because I read a lot from the analysts, but they all like downgrade the banks to hold, to sell, that kind of thing. Yeah.
I read about it.
Yeah. I mean, good point that you share that the loan growth will more than offset the interest rate cuts impact. For me, right, my second half outlook, also on interest rates, but maybe a different approach, which is when interest rate cuts, it will benefit the commodities. So rather than going for the banks, which I feel that they are like directly impacted, right? I take a different approach. I look at commodities that will benefit from this expansionary phase that you mentioned about, which is gold and oil. So we all know gold is like all-time high now. Oil prices also quite stable, right? Around $80. And then with all this geopolitical tension, like the Middle East, Russia, and potentially, I don't know, Taiwan or what. So I do see that commodities will, maybe increase going forward. So this is what I have for my second half outlook. But other than that, on the US elections, so I've taken a look at the chart. There's this very nice picture that says, no matter what US president take over, eventually the US stock market will increase. So it doesn't really make a difference whether it's Harris, Kamala who win or Donald Trump who win. But ultimately, the US stock market will increase because the companies inside, all the big tech giants, they don't deteriorate because of the US president. Maybe Harris is more like concerned about the taxes, so she will tax all these US corporations, and that's the reason why maybe the Warren Buffett is cutting the stake on Apple. I mean, other than that, I do see that over the long term, the impact will be minimal regarding the US elections. Yeah, so that is from me, second half outlook.
I agree with you, especially on the part on the US stock market, as we can see from the S&P 500. If you zoom out the charts, regardless of who is the president, or from which party are they from, whether is it Democrats or Republicans, you can see that the stock market over the years, and for the S&P 500 is like on the upward rising trend. So I don't foresee that trend being broken. Although that we may have like correction market, bear market from time to time. But in the long term, I think the S&P 500 is always on the rise. And I think the trend will not be broken. Yeah.
Thanks for adding on. So now we move on to the stock picks. I think readers all want to know about stock picks. Maybe bro, you go first.
Thanks bro. Okay, my stock pick is not about REITs, even though many people think that I will choose a REIT. But this time around, I'm going to do something different. I'm going to choose a bank. And that bank is not DBS, because everybody will be expecting me to choose DBS, but not this time around. I'm choosing OCBC for 3 reasons. Number 1 is that the gap has closed between the OCBC and DBS. Number 2 is the great job done by Helen since she became the CEO of the bank in April 2021. And number 3, the bank has a REIT-like yield at the moment. So let me dive a little bit deeper on each of the 3 reasons. Number 1, for those of you who have been following my comparison post, where I did after the 3 banks released their quarterly results. You will notice that from the third quarter of 2023, right, the gap between OCBC and DBS have narrowed. In fact, in terms of the growth of the three banks are concerned, right, on some quarters, you will notice that OCBC have actually edged out DBS to have the strongest growth. Just take the first half of the year of 2024, for instance, right? Look at the number of new highs that OCBC have recorded. It's just amazing. And number two, on the good job done by Helen since she became the CEO. So personally, I feel that since she became the CEO, right, the bank actually started to unlock values and started to grow. And then not just for those for the medical generations who are English illiterate and need help for banking. So you see OCBC branches, right, within the proximity of MRT stations, which sort of brought about a lot of convenience for these elderly people. And at the same time, right, they are also building on their tech capabilities to cater to the affluent population who like to do all their banking things on the mobile app. So I think that's number one. And number two, I still remember when she did her first AGM as CEO of the bank, she spent a lot of time to talk about her positioning for the bank for the future and how she intends to deepen and expand the bank's regional presence. And then every single year during the AGMs, she will give an update on the execution of the plans, which I think, in my opinion, is good transparency and accountability. And it's something that I think I really appreciate as a shareholder of the bank. And then also the yield, right, is pretty much REIT-like. Based on the payout of 82 cents in full year 2023, right, and its closing price about $14 yesterday, the yield is about 6%. So by buying OCBC, right, so one thing is that I feel that the bank will continue to grow, number one. Number two is like, compared to REITs, when you invest in a bank, you don't have to worry about dilution due to rights issue and things like that. So this is something, in my personal opinion. But of course, I think some people may be concerned about the bank's focus on the Greater China region because of the headwinds faced there, such as like a high youth unemployment rate, slowing economic growth, poor consumer confidence, and also things like the property crisis that's going on right now. As you can see, some of the Singapore-listed companies with exposure in China are seeing a slower growth because of this property crisis. But then the thing is that let's not forget that China is still the world's second largest economy. And of course, I'm not saying that this issue can be solved like, in the next couple of days or months. It's going to take some time for sure. And I think one will need to be patient in terms of waiting for the government to settle. And also Helen has a very good experience in the Greater China region, which I feel will play a very big role in OCBC further deepening its presence in the region. Yeah. And I think that another thing about China, right, one of the signs to look out for is the return of foreign investors into the country. Because right now, as you can see, there's a lot of exodus of these foreign funds out of the country. And Singapore is one of the few countries that is actually benefiting from this. As you can see, like a lot of people setting up family offices here. There's an increasing number. So I think one of the things to note is that when you see like foreign investors going back into China again, that's one of the signs to look out for. And definitely OCBC will benefit from this. And also another tailwind, right, for the bank, in my opinion, will be the privatization of Great Eastern. If it does happen at the end of the day, even though Helen did not actually elaborate on her plans, because it's still not so-called not a done deal yet. But I'm confident of her plans to bring the insurance company forward and create some synergy between the insurance company and the bank itself. So this is something that that I'm looking out for, in my opinion. So what about you, James? What's your stock pick this time round?
Oh, before I go to my topic, I want to share maybe my thoughts about OCBC also. So
Can.
I think it's pretty interesting that you mentioned you went down to the AGM every year. Huh?
Yeah, except for this year because of a lack of time. Yeah, but I do get a
Oh,
lot of updates from community members on investing note. So it's like as good as I'm there.
wow. Okay. But I mean, the fact that you go down and then you went down to all the banks AGMs before,
Yeah,
and
correct.
then you feel that Helen is like the most transparent out of them all. Lah. Is
Okay,
that the
if you
case?
don't include Piyush,
Okay. All
yeah,
right. I
but
get what you mean.
for the job that she has done in a short time period of just about 2 years or so, two,
Mm,
3 years since she became the CEO, I think she has done a
mm,
fantastic job. Yeah, and
wow.
then
I
she
mean that's
oh, mm,
good to hear lah. I mean from you that because I myself have never been to the bank's AGMs, so I don't know what's going on. What we can see is just the report card at the end of every quarter. So to me, like the three banks, more or less the same lah. You know, the net interest income and net
yeah,
interest margin around 2%. You know,
mm,
ROE, DBS is higher, but higher price to book. But if we go in diving deeper, like what you said, right? The transparency and her experience in the Greater China region, I think that will really help, especially that to maybe in my point of view, right, is that a lot of companies want to from China, they want to move to ASEAN also. So
correct.
they can use OCBC as the
Yes,
linkage.
yes, yes. Very good
Yeah,
point there. In
yeah.
fact, that's one of the things that Helen pointed out in her AGMs that she wants to be the link between the Greater China region and ASEAN, so as to facilitate
Mm,
like businesses right from the Greater China region they want to expand to ASEAN and vice versa.
mm,
Yeah,
Then that's good like, in a way that they are able to do something that the other two banks cannot do.
correct.
And also on top of the Great Eastern acquisition, I think more or less done deal already. Like they already have 90% of Great Eastern already. So
Correct.
it's a matter of just chop, okay, then you are mine, the kind of thing. And I do, I mean, I read through all the articles about Great Eastern, and I honestly think that they are also like doing a bargain, a, a purchase, because Great Eastern went down all the way. I mean, they are all the when you compare insurance companies, their policies and everything, they are like at rock bottom, then they go and buy it. So there will be a lot of value being unlocked in future, lah. But that will
Yeah,
be under OCBC already. Yeah, so I
yes.
think a lot of valid good points that we have made about OCBC. So next time I can share with my whoever who want to know also. Yeah,
And
thank
it's
you,
also
thank you.
at $10 plus compared to the other two banks, which is trading at 20 plus. So in terms of affordability, yeah,
Yeah,
OCBC
yeah.
in the monetary terms is definitely more affordable compared to the other two banks.
Yeah lah.
But they are
But
only
that's the share price difference only. It's just
yeah,
that if you times 100 shares, okay lah, 13K, right? Versus DBS
13K,
like wow, like
about
50千
3,000,
抌进去
3,000 plus. Yeah.
30多40多千抌进去 wow, cannot take it.
So for new
Yeah.
investors, they might be like, they will be holding back on
So one
invest.
of the three
Okay.
banks, if you want to whack one, you like maybe they're more keen on OCBC lah.
Yeah, people
I
can
mean
have a
good.
look at it. Have a look at it. And because
Yeah.
I know some people are still not comfortable with the Greater China region. So it's
Mm,
something
mm.
that they need to consider.
Yeah, actually, I myself, I always have that kind of inherent risk, that because OCBC is very big on China, that's why I thought that their
Yeah.
results will do poorly. But in fact, when I look at their results, wow, double-digit growth like, in net profit. So that is
Yeah.
something that really changed my mind. Yeah.
And also just to add, the non-performing loans ratio, right, is just
Mm.
0.9%.
Yeah,
And it's the lowest
among the
among the
three,
three
right?
banks. Yeah, yeah. And they are
I'm
in
quite
Greater
shocked
China
also.
region.
Yeah, maybe their management is they really scrutinize the loans or
Yeah.
whatever.
They really know what they are
Yeah.
doing. That's why I I'm so confident of Helen bringing the bank forward. I mean, of course, this is just my personal opinion.
yeah. I always think female CEOs 有一点比较 competent 的嘞 like the upcoming DBS also.
Yeah. I'm very confident of Susan actually. Of taking, because actually before this whole news was broke out, actually I feel that right she will be the new CEO. Because if I've been following the bank's performance over the years, and you see right, Susan in the divisions or in the business segment that she's handling, right, you can always see very good performances.
Oh, is it?
Yeah,
Oh,
and she's
really drill down.
Yeah,
into
you always
segment,
see her right, in the annual reports, and she's also the director, one of the directors in Maple Tree Pan Asia Commercial Trust. She was also the nominated MP before.
哇，什么都 whack.
Yeah, so she's like very
Bagus.
competent, and she's like the only thing just to share about DBS since we are on the topic, I think is how she's going to handle India. Because I think there was a lot of hoo-ha back then when Piyush proposed the acquisition of Lakshmi Vilas Bank. And there was a lot of hoo-ha. But back then, I was very confident of Piyush being able to turn the bank around. Because after all, he's born in the country. And who else, right, to know more about the country in terms of opportunities better than the man himself? And indeed, he has proven that he's managed to unlock the values of Lakshmi Vilas Bank. And from what I heard, right, the bank is already profiting and already contributing to DBS financial results. So moving forward, right, I'm quite interested to know Susan's views on the bank in India and what is she going to do about it. Yeah,
next year you attend the AGM, you ask her.
I think we have to go the year later.
Yeah.
When
after
she's
she
officially
become
there.
the official CEO. Wow, very good points. Okay, thanks. So now let me share my stock pick lah. Okay.
Yeah, looking forward.
So my stock pick is Nike, which I've shared before in my previous video also, my YouTube video. So maybe I just talk about it because Bill Ackman just released that he owns 3 million shares of Nike. So that's really a big stake, worth few hundred million in Nike itself. And if you look at the share price of Nike, right, they really went down like from 130 plus all the way down to 70 plus. And that's where I so-called made the call to I also invested in Nike myself when it was trading at 70 plus, because back then I did my research. The fundamentals were amazing. Even though Nike didn't do a good job in the outlet management, because what happened, right, was that they pull out of all the the wholesale retail outlets. So all these, like maybe in Singapore is World of Sports that kind of retail outlets that carry Nike shoes. So they want to do it themselves. They have all these Nike outlets, and then they want to get the data. They do it themselves through online or through their own stores. What happens is that when they pull out of all these retail outlets, there are a lot of vacancy spots. So all these new brands, new competition of like On Holdings, the On shoes, and the Hoka Under Deckers, they all went to take out the top spots. So in the end, people see, got new innovative shoes from all these On Holdings or whatever. Their shoes like very cushioning, got bouncy things. I'm not aware of all this new technology but from what I can see is that they made a mistake You pull out, you thought that people will just follow you, but in fact it's not the case. People will go into the outlet and they still want to feel and touch. So when you are present in like maybe in a shopping mall, you don't have the Nike shop, but you still have those kind of resale outlet, right? And you can feel and touch Nike shoes all the time. That's where you have like the brain and the mind recall that, oh, Nike is here, that kind of thing. So for the CEO who came in and did this, he realized his mistake. So he mentioned a few times like in the earnings release, in the commentary, that he know of this mistake. He already brought in the 30-year veteran, okay, who is managing all these relationships. So he retired already. He brought him back to man the relationships with all the retailers all over the world. So that was one catalyst that I saw, the turnaround catalyst, because you know your mistake, you bring in someone to really fix it. The other catalyst is the Paris Olympics. So they really 砸钱, like they are I think if I'm not wrong, they really outspend all the other competitors because they know that this is their chance to turn things around, let Nike be on the global stage again. So I think they did a great job. Although the campaign video has a bit of controversy, because they have Chinese athlete, they licking the ping pong bat. And you go and Google, it's super funny. Then the Chinese netizens, sorry, and they all complain, boycott Nike and that kind of thing. But 我觉得 whatever press got negative press also good, in the sense that Nike come back to their mind again. Once this thing blows off, Nike will still be on their radar. So every time they want to buy shoes, they can compare like, oh, if you have a bit more disposable income, naturally when you look at the different brands out there, Nike still has the highest brand value, brand equity in mind. So yeah, and maybe the last point is that Nike, if you look at their dividend growth, is 11% annualized growth in the past 10 years for their dividend payout. So that really is fantastic. So they are giving out 2%. Back then when I first purchased the shares at $72 around there. So they were giving out 2% because their share price came down a lot. And also due to the fact that they produce a lot of free cash flow. So this free cash flow, they have so much cash, right? So they also buy back a lot of their shares and also give back a lot as dividends. So in fact, right, the dividends grow by 11% every year. So that's the reason why they're able to fork out a 2% dividend, be it the share price drop and also the dividends increase. And I think last point that I want to make, maybe let me share screen on the Seeking Alpha. Yeah, so this is a comparison of Nike versus all the other footwear brands, Skechers, On Holding, Crocs, Deckers, right? So Adidas, even though they are the second, right? They are the second biggest at 42 billion, right? But I don't know. I feel that their brand is lost when you compare Nike versus like On Holding or even Deckers. They don't really stand out anymore, right? Like On Holdings and Deckers, they stand out for running shoes. Skechers is like more for, I don't know, I feel it's more like at leisure. That means for elderly, they want to walk as well as maybe brisk walk or slow jog. A lot of people, they go for Skechers. Nike is, of course, all these athletes or they also moving into at leisure. So if I were to choose between the few largest one, Nike is my choice. So on top of that, right, if you look at their margin, okay, so their PE is 25 times. They used to trade around 40 times. Okay, so Skechers is the one of the cheapest, and also Crocs at 10 and 15 times. So I mean, you can also take a look for people who are interested. Okay, Yeah, so I want to share is this the return on equity, 40% for Nike. Okay, so Deckers is 41%, also fantastic lah. But it's much higher than the other shoe brands except these two. Okay, so net income margin also pretty high, 11%. Okay, they are also catching up lah, the other shoe brands. Yeah, so I would say that Nike really need to have a new growth strategy lah ahead. Maybe pump on their more of their branding, come out with more innovative shoes to negate the competition lah. But I do see that they are already doing that. So in a way it's good lah. And more importantly, Bill Ackman also came in, and I'm happy to know that I'm on the same. I'm aligned with a billionaire investor
You
on
are in the
this
same
front.
boat as him.
Yeah. So this is it lah for me for the Nike.
Very interesting share there, bro. 40% ROE is really fantastic lah.
Yeah.
And one of the biggest thing about Nike, right, that is floating around right now is whether they will do a Starbucks, meaning they fire off the current CEO and get someone in. What are your thoughts on this?
I think hopefully there's a new CEO lah, because even though the current CEO did a poor job okay lah, he managed status quo lah, but he realized that the mistake is being done right. You need some time to fix it.
Agree.
But of course, the whoever new CEO that comes in, if he really can bring about some new changes, it will really catalyze the share price to move up higher. That's what I feel. Like Starbucks, they don't do well. New CEO come in, the shares jump 20-something%. Walao, like 他不是神欸。But yeah, I do that. I do feel that if there's a real new CEO that has a lot of caliber, maybe from I don't know from where, from On Holdings or whoever, then join them, they were really hot big time. But it really because Nike is already like quite a big company. So for them to manage different kind of it's not just footwear. They still got apparel and other, like maybe I don't know, like those accessories and things like that. So it's not easy lah. And for 40% ROE on such a big company is really not easy. It just shows that they have a very strong past performance ahead in the past decade or so, so that even if you make mistake, there is still chance of recovery. Yeah.
Yeah. Thank you so much for sharing with me your thoughts. Dividend payout is also another thing that caught my eye. 11% of growth in terms of its dividend payout every year is no easy feat. Year in, year out. Yeah, despite its slowing growth in terms of its financial results.
Yeah.
Fantastic. I think definitely is something with an easy to understand business for those who are looking to invest in the US market. You are wondering from where you can start your research, right? Perhaps Nike can be the first company for those who want to get started.
New to the US stocks market.
Yeah. Simple to understand business. In terms of ROE growth, fantastic. Dividend payout, it's very decent, 11% growth every single year. The only thing is the financial results and also the competition. Yeah, correct.
The competition. Yeah.
But no company is perfect. Really, no company is perfect. So at the end of the day, people have to decide what they are comfortable with and not comfortable with, and then they make the decisions accordingly. Personal opinion here.
Yeah. Okay, so we sort of end here. So this is the end of our fireside chat. So for
great session.
great session. So for readers who want us to discuss about topics you are interested in, feel free to leave a comment down below. Me and Jun Yuan will see what are the topics that we are also capable of sharing. Then we will brainstorm and do another video next time.
Yeah, definitely. It was a great pleasure to be here again, and thanks for the invite, bro. And I really hope that everyone who is watching this video will find this session useful, especially the contents is like very a great wealth of contents, not just in the Singapore market, but also in the US market.
Yeah. Thanks a lot. You also.
Thanks a lot, bro. Thanks.
Thanks for the OCBC insights.
Yeah, thanks for the Nike insights. Very insightful.
Yeah, thank you. Okay,
Thanks,
see you next time.
Okay, see you next time. Bye.
Thanks, bro. Bye-bye.
Thanks, bro. Bye.
Okay, stop.